Tommy Blair,
Here.
William Stanley,
Present.
and Joseph Smith.
Here.
Okay, on the fire side, AJ Anderson?
Present.
Latham?
Here.
Michelle, I'm here. Dean?
Here.
Brian?
Here.
All here, all present.
All right, moving on to public comment. Is there anybody that has a comment would like to speak? All right. Moving on to the minutes. We'll just review the minutes or vote to approve the minutes?
No, don't go through them, and just approve them, if
Okay.
everybody's looked at them.
All right, has everybody looked at them? All right, motion to approve.
Second.
Who's second?
Joseph Smith.
All in favor?
Aye.
And the motion to accept the minutes?
A motion to accept the minutes?
Second?
Seconded.
All in
Who
favor?
made the motion?
I'm first.
Okay.
Brian second.
You guys got to speak up a little bit. And who seconded it?
Brian.
Okay.
All in favor?
Aye.
Aye.
All right, moving on to expenses paid. We're just voting to approve them, correct?
Yes.
Has everybody reviewed them?
Yes.
Yes. This side, any questions? No? Motion to approve?
So moved.
Second.
All in favor?
Aye.
Aye.
Fire side, any questions? Expenses? Motion to accept?
Motion to accept.
First by AJ, I'll second it. Latham.
All in favor?
Aye.
Aye.
All right, moving on to Salem Trust. Looks like we need signed agreement with Argent for both plans.
Right, I have those documents here, so when we finish, and these, what you guys approved back in January, so.
I did have a question on those. Has Pedro reviewed and approved those as well?
I,
Hi. Yes. Good afternoon, everyone. Yes. So this is the final agreement that we have prepared with Argent.
Okay. Thank you, Pedro, for clarifying.
Yes, ma'am.
All right, moving on to, does anybody have anything to say about that? All right, moving on to ANCO, quarterly report. Hi, Carrie.
Good afternoon, thanks for the time, and actually, we are coming to you as Mariner today for the first time. So we just made that transition April 1st. I'm actually surprised we closed on time, but we did. I'm pleasantly surprised. So officially, we are Mariner. I think you'll notice the cover of your book looks different, but that's really kind of the only thing. It's still the same exhibits on the inside. Obviously, I'm still your person, and so it's really very much business as usual. So I think just kind of jumping into March 31st, and then I do have a bit of an update for you as well. On page 3 is where our typical market environment information begins. And while you flip there, I'll just say, it was a very good quarter. Equity markets were up very strongly. If you look at the top right chart there on page 3, the S&P was up north of 10.5%, mid and small caps also positive, kind of in the neighborhood of 5 to 8.5%. So very good kind of equity market performance. I think there's a few different things going on here, one of which is economists had been forecasting a recession for a long time after the Fed kind of undertook their hike cycle. That really didn't ever come through. Also, what you saw at the end of 2023 was the Fed shifting their language from potentially entertaining more hikes to very likely they would look at, if whether or not cuts were warranted in 2024. Equity markets really liked that, and so you see that kind of coming through in the numbers there. It was still a very kind of technology on quarter. So, NVIDIA, that name associated with semiconductor chips, continues to really kind of knock the lights out of the park. And names like Microsoft, Amazon, continue to perform very strongly. Meta, formerly Facebook, You did see a little bit of kind of dispersion in those Magnificent Seven, though. Apple did pull back a little bit, Tesla did pull back a little bit. So some of that is a good sign of the beginnings of market broadening, but we do have kind of a long way to go in that regard. It's really still those kind of mega cap technology names that are responsible for a large portion of the performance that we've seen. Nonetheless, very good, as I mentioned, performance domestically within equities. Overseas markets in gray on the middle of that page, also positive. So you see the all country up a little bit less than 5%. The EFA or developed markets up almost 6%, and emerging markets up about 2.4%. I think the U.S. really kind of led the way kind of coming out of COVID and continues to do so. Obviously, Europe had their own challenges with the situation in the Ukraine and energy supplies. But there's some green shoots coming out of Europe as well. Their GDP number for the first quarter just came out. And essentially it had been lackluster and pretty flat up until now. This past quarter, it was kind of 1.5%. So signs that things are kind of moving in the right direction. A lot of that coming from kind of good tourism. But again, the U.S. has kind of continued to lead the way as compared to overseas markets. Within fixed income, in the bottom third of our graph there, you see in green, slightly negative numbers. The full aggregate was down a little bit less than 1% for the quarter. And what you saw there, and if we flip to our yield curve page, which is at the bottom of page 10, you can kind of see it for yourselves there on the bottom right. But, you know, the market is very hyper-focused on what the Fed's going to do, where the inflation numbers are coming in. And though we've made great strides in getting inflation down, it's still kind of in that low to mid 3% year-over-year increase. The Fed would like to see that at 2%. And so rates did tick up a little bit. We went from kind of the yellow line there at the end of December to where the blue line is at the end of March. So you can see rates did pick up a little bit. Anticipating that maybe it would be a little bit longer before the Fed does cut, kind of waiting to see those inflation numbers again get kind of closer to that target of 2% that the Fed would like to see over the long term. Any questions on the economics piece before we flip into your individual pension plans? Okay, so hearing none, I will flip in your books to 13. And first I've got the police book up, so I'll speak to yours first. But on that page 13, you see our kind of rolling 10-year graph there. And you can see for police, your pension fund was up about $18.3 million. With that 10-year return there in the bottom, 7.2% annualized over the last 10 years. And keep in mind, that's with that very challenging fiscal 2022, when really everything was down in the teens. We're still kind of in that 7%-ish, a little bit north of 7%, which is a good level to be. Then on the fire side, very similarly, that page 13, you can see your pension up about 18.4 million at the end of the quarter. Very similar trajectory, obviously, over the last 10 years, and again, at about 7.25 over the last 10 years as well. Looking at asset allocation and police, I'll start with you on 14. So looking at kind of the overall fund from the 10,000 foot view, on the police side, about 52% of your assets were in domestic equity at the end of the quarter. About 15.5% was in international equity. Just shy of 14% was in domestic fixed income. A little north of 4% was in global fixed. About 12.5% was in real estate. And you had a little bit of cash as well, less than 2% for kind of, expenses, et cetera. And then on the fire side, did I just close out on myself? Okay. Pardon me, I managed to close out of one of my books here. Let's see. Of course, my computer's crashing. Let's see here. Yeah, let me see if I can get this real quick, and if not, I may take a paper copy. Thank you. Okay, and on the fire side, my apologies for the delay there. From an asset allocation standpoint, about 52% in domestic equity for you all. Oops, I had fire up and I'm confusing myself. Okay. I think I toggled back and forth to the wrong books. Let's see here. Police, I think I read you fires. So what I just read, 52% domestic equity, 15.5 international equity, almost 14 in domestic fixed, a little over 4 in global fixed, 12.5 for real estate, and a little bit of cash, less than 2%. That was actually on the fire side, so my apologies for the confusion. On the police side, about 50.5% of the assets in domestic equity, obviously very similar, just shy of 15% of the assets in international equity, roughly 16% in domestic fixed income, little north of 4 in global fixed income, about 12.6 in real estate, and a little bit less than 2% in cash as well on your side. And just looking at that kind of from a range and target standpoint, in each book we'll go to 19.
We're going to be on call. Rescue 60 has one trauma agreement, ORMC.
And for each of your two plans, you'll see, when we look at the ranges for each of the asset classes, that kind of gray space, the triangles are all green and all pretty close to the target lines. So you are within your investment policy parameters for both plans. You can see on the fire side, we're slightly more overweight kind of domestic equity, a little bit underweight fixed income, and a little bit underweight real estate. On the police side, we're a little closer to target in domestic equity, domestic fixed income as well, but also underweight there in real estate. Getting into the performance for the end of the quarter, and again, I'll start with fire here. So overall for the fire plan, you all were up just about 5.8%. The policy index was up about 5.1. We actually saw most of your managers really performing very well for the quarter, which I was really glad to see. On a fiscal year-to-date standpoint, it puts you at right about 13%. Again, very good place to be at roughly the halfway point there. And then just kind of high level, I'll flip over to the police side. You were 5.4 for the quarter. Again, that benchmark up about 5.1. And about 12.5 on the fiscal as well. So very good kind of double-digit numbers for both plans. Really happy about that. On the police side, just due to kind of allocations and cash raises, you have a little bit less in kind of that growth segment than they do on the fire side, accounting for the little bit of a difference there. But really very good numbers for both of you. Just kind of digging into the segments overall, each fund slightly north of 10% for equity overall, both US and overseas. The policy index was up there kind of closer to 9. So within domestic equity, both funds up around 11%, fire slightly north of that. The index up about 10. So on this, continuing kind of growthy environment that we've seen, with that pullback in kind of Apple and Tesla a little bit, you see Allspring coming through, north of 14.5% for them. Also that kind of good climate for growth and good selection, also benefiting Touchstone, which was up north of 10% over the index, which was up about 9.5. On the value side for both funds, Brandywine, kind of that low PE focus that they have really across most of their sectors, lifted them up over 11%. The value index was up 9. And that was a nice offset to Vanguard Equity Income, which had a good absolute return of almost 8%, but did lag a little bit. Some of their pharmaceutical names like Pfizer, are trailing a little bit as kind of some of the boosters are kind of backing off a little bit. And so that was a little bit of a drag there, but really, again, because collectively the managers did well, it did kind of carry performance very nicely. When we look at the international segment, that segment in total was up over 7%. The international index was up closer to 5. So again, on the growth side, Euro-Pacific up almost 7.5%. A few themes you're probably tired of hearing me talk about. One, of course, is semiconductors, but also kind of air travel. Names like kind of Safran and other aircraft-related names overseas also did very well. And so kind of luxury, and in some cases, luxury goods makers continue to do well. And then even on the value side, DFA, you see there, also up almost 7 over the value index, which was up closer to 5. It was a very good quarter for Japanese equities, which have been depressed really for decades. The Japanese government passed some kind of corporate reform for shareholders that's viewed as very favorable, and Bank of Japan also lifted interest rates out of negative territory, and so both of those were very good for Japanese equities, and that fund is a little bit overweight there, so that was a nice lift. As I mentioned, within fixed income, it was a slightly negative quarter. You can see for both funds, you basically were flat against the index, which was down about 1%. You have Dodge and Cox, both of you, on the domestic fixed income side. This is a manager that has kind of shortened a little bit their interest rate exposure, but they also use a lot of corporate securities, and it was a very good quarter for corporate credit. So you see them down about 30 basis points, but again, the index was down about 80. And then on the global fixed income side, also kind of running a little bit short there, benefited PIMCO up 92 basis points. Last but not least, and the real estate segment continues to see some pain there. You can see ASB down about 7, the index down about 2.2. The lion's share of that continues to be write-downs on office properties because they have such a concentration in Washington, D.C., in San Francisco. According to their latest commentary, they think where prices are now, it's likely they can probably sell and exit and move on. But if you all will recall, we did submit full liquidations there at the last meeting. And so taking you through a little bit of our recent history, about 5 quarters ago, we had decided to take a $250,000 distribution. And so to date, since then, we've gotten about $50,000 of that back. Obviously, as of last meeting, we have fully liquidated. Hopefully, if we do see the Fed cut and interest rates do come down some, that will help to breathe some life and bring some transactions back to real estate. But so those full redemptions were submitted after last quarter, so we are in the queue for the entirety of that piece.
So that 50,000 accounts for part of this drop in the real estate value, is that correct?
The $50,000 is actually cash we've gotten back. We've gotten about $11,000 or $12,000 back every quarter since we submitted our $250,000 distribution. What you see in the negatives is actually just the values continuing to be written down. They were able to sell a few assets, very kind of small, a piece of retail and a small piece of office that was worth like $12 million. So they're getting a little bit of cash flow, but obviously not a lot right now. We do think valuations will settle in the next couple quarters. We're getting very close to kind of where private market transactions are actually happening from a pricing standpoint. So that should mean there shouldn't be a lot more pain to be felt. I think we're getting there. But it will be, it's going to be a little while, I think, before we totally kind of work our way out of that piece. And then for each fund, I did bring you an update as of actually yesterday. So on the fire side, you all are just slightly north of 18 million as of print. On the police side, about 17.9 million. So a little bit below where we were at March 31st, probably a couple percent less. April was a pretty significant kind of sell-off in equity markets. The S&P was down about 4% because, again, markets continue to be hyper-focused on kind of the inflation situation and the Fed speak and when they're going to cut. But we actually recovered, somewhat, probably half of what we lost so far in May. We've actually been pretty strongly up. So likely you're still double digits on the fiscal. We probably gave back a couple of percent through yesterday, but likely still double digits on the fiscal year. And I'm happy to answer any questions that you all might have.
What do y'all anticipate the market doing for the next few months?
So election year usually means just heightened volatility. I think, if the Fed does cut, I think that's going to be a positive thing. But typically right around election time, you just continue to see kind of more volatility. Typically that calms down afterwards, and certainly hope that that's the case. But equities I think are pretty fairly valued at this point. What I hope to see is kind of that participation of, the narrow leadership continuing to broaden, because I think there's a lot of underloved equities out there. So I'd like to continue to kind of see that happen. But the thing I'm the most confident about would be kind of continued volatility, lots of large moves, because it is an election cycle. afternoon?
Do you want to go over the Mariners?
Yes, I would be happy to. Oh, the FPPTA?
Yeah, that one
Yes.
that you sent.
Okay, so Debbie's asked me to just kind of keep a look out for conferences for you all, just educational conferences. And so the next one that's coming up is put on by FPPTA, and it's really their summer conference. It's not quite as curriculum heavy as I think the fall school and the winter school that they do. But there is obviously some educational content to it. That is coming up June 23rd to the 26th. It's in Orlando. It's at the SeaWorld Renaissance Hotel. And then typically in early October, they'll also do a fall school. So I'm sure that one will be that first week of October as well, that is a little bit more education focused. I tried to kind of pull that one up to verify the location for that. And of course, my internet's not working really well in here. But I can circle back with you on that one. And then the Division of Retirement will typically do one that's free. That is in the past, it has been kind of the last part of September, like the last few business days of September.
Yeah, they got one on the 22nd through the 25th.
Okay, did they say that one's in Orlando too? I actually
No,
haven't
this
gotten
one's
an
in
email
Hilton
about that.
Bonnet Creek.
Okay, so that would be Orlando
Is
then.
that
Yeah, that would be
Orlando?
Orlando. And that's a good one. It's geared towards police and firefighters. And again, it is free. So really it's just your travel and your time that one would cost you as well. So you said September 22nd?
22nd to the 25th.
Okay.
Now, the one in June, we're not members of.
It's pretty expensive, I
Very
think. It's expensive even if you are a member. It's more expensive if you're not a member. But I would say, I think the Division of Retirement one they do an excellent job, in my opinion. So if that September 22nd, to 25th timeframe works for you all, that's a really good conference. I think they do a great job.
When will we get information on that?
I went online today and there's nothing you can't, the one that costs a lot of money, you can start going.
Yes.
The agenda's not ready, it's not available.
Yeah.
But you can't register yet, and the one for September, you can't even get anything on that one yet.
So by our next meeting, you may have some.
Question.
Yes, I would really think so. Yes, that's much closer to time there.
Is there anything on Mariners that you want to discuss? 'Cause we got
I
something
think-
From Sarah, somebody, with a Form ADV Part 2A.
So that's kind of just an update to our annual reporting, and it reflects the fact that we are, kind of under the Mariner umbrella now. I think that the repapering of the contract is still going on based on my understanding, and I'm sure Pedro will probably talk to you all about that. I don't believe that's ready. I think it's close, but I don't believe that that's ready.
Okay.
Thank you, Carrie.
Thank you.
All right, Pedro, you're up.
Okay, good afternoon, everybody. Hopefully you can hear me okay. I just wanted to just touch or follow up, I guess, on the discussion, the comment that was just made regarding the contract with Mariner. I believe we're working on the contract for several mutual clients, and so I think we're kind of just at the last stages of finalizing that agreement. So hopefully that should be ready relatively soon. I know we had a call on it last week, or it was the week before, and I believe that Mariner was just making some final revisions, and so we should be ready to go with that hopefully soon. So once that's finalized, I will forward it over to Debbie, and then she can have each of the chairpersons sign off on that, and then that will be the final agreement with our consultant. Okay.
Okay.
All right. I also wanted to, on the police side, I wanted to update you. I know we discussed it briefly at the last meeting, and it was really more of just kind of a formalized acceptance of the application. But there is, as you guys are aware, there is a pending disability, and so we're still in the record gathering process. I believe we've sent out a third request to, I think there's 2 or 3 different providers who have not yet responded. So we're still working on finishing up getting all the medical records. But once we have that, when we'll go ahead and, as schedule an IME, independent medical exam. And then once we get the final report, we'll be ready to hold a hearing. And so we'll keep you posted in terms of the progress. But that's how we're looking in the next few weeks anyway. Any questions or anything?
Yeah,
on that?
financial disclosures, we have one member that's got a question on the financial disclosure going online, and do you want to ask
Yeah,
questions?
we do Form 1, correct?
Yes, sir. That's right.
And it's signed out, yeah, it was, I was looking at Form 6, I was getting a little concerned.
No six.
Yes, you would not be alone. Actually, so Form 6 is being.
What happened?
You click out?
Overpass.
But I do know, at least as of now, it's being challenged because I think, kind of to your point, many folks took exception to the form as it was presented. So that's in the process. But for us, for you all, for pension trustees, we continue to file Form 1. Form 6 is only for publicly elected officials. So, state legislators, the governor's office, certain cabinet members, the judiciary, and, obviously certain council, city council members, mayoral positions at times, but not pension board trustees. So we continue to file Form 1. And I think I heard Deb mention it, but as we discussed at the last meeting, it is something where you will file electronically now through the State Ethics Commission, through their portal, online portal, through their website, essentially. You will need to have a username and a password. Typically, it's the same email address that you've been using or that's registered. And then once you log in, it's a fillable PDF. You complete it, you hit submit, and then they'll send essentially a confirmation email, just acknowledging that they received it or that you filed it or completed filing successfully. It is still due July 1. So obviously, if you have any questions, I just want to mention it as well, just to kind of keep it on your radar. But if you have any questions, obviously you can feel free to reach out to me, and I'm happy to kind of walk you through it.
Form 1 is pretty much the same, right? As it's always been?
Form 1 is the same, with the exception of, if you recall from prior years, you used to be able to complete it using two different methodologies. You would be able to either use a percentage basis. So if it exceeded 10% of your gross annual income, or you could use a dollar value, which was the $2,500 threshold of gross annual income. So the percentage basis has been removed. So now, while the form is the same, there is only really one way, one gauge, right, to complete it or to disclose, and that's the dollar threshold, the $2,500 of gross annual income. So the form is the same, but the instructions or how you complete it is a little bit different.
Yeah, I guess that's all I wanted. Hey, is there a possibility, we could get copies of this form from years before? Do we have that? Can I get a
I don't have
copy?
your copies, no.
No, who has mine?
You would have to go to the supervisor election.
So they have them? Okay.
The supervisor of elections should have your prior versions that were filed, although it's either the State Ethics Commission or the supervisor of elections. I'm not certain who the custodian of records would be, because essentially the supervisor of elections was a pass-through, if you guys recall, right? You would file it with the county supervisor of elections, and then it would file it with the State Ethics Commission. So you used to be able to go on the county website, on the county elections website, and you used to be able to pull them there, but I'm not certain now where they are. But we did provide a memo with kind of a draft Form 1 and we can resend that to you guys. It's so you can see, maybe it doesn't obviously have any of your information, but it just has a copy of the form.
Okay.
And I did also just want to mention a question that I've been getting a lot from some of my other boards, and just to reiterate with you guys, I think I mentioned it at the last meeting, but you do not have to include any kind of a value, right, for your respective disclosure, right, in one of those 4 different categories. So if you have a brokerage account or an ownership in a company or another revenue stream that you have to disclose, right, you just have to disclose what it is, right? You describe it. You don't have to disclose that your brokerage account is, $200,000 or $220,000 or whatever the case may be. I just want to mention that in case there were any questions on that.
Thank you.
Pedro, I have a question about the disability you were talking about. Is that what,
Yes, sir.
are you referring to the letter that we previously received? Or the claim?
I believe the application.
Sir,
Yes.
Yes, that's right.
all right,
That's
thanks.
correct. So we received the application just before the last meeting, I believe. I think there was a couple things outstanding. The HIPAA release form, I think, might have been outstanding, but yes, that's exactly what I'm referring to.
Okay, thank you.
Yeah, no problem at all. And just to kind of close the loop on the most recent legislative session, I know it was still going on last time we met, but there were no bills passed that would affect our plan. I believe with you all, there had been a bill filed that would have amended or revised FRS with a couple of things, most notably Florida Retirement System. Most notably, it would have added or reinstituted the 3% COLA for members hired on or after July 1 of 2012, but that did not pass. So my expectation is it will be filed again next year, but just for the time being, no changes legislatively that would affect us.
Okay,
And that's all I had.
all right. Anybody have anything for Pedro? All right, well, we appreciate your time, Pedro.
No, thank you all for the accommodation. I really appreciate it.
Yep.
Okay. Next.
All right. Next quarterly meeting is August 6th. And do I have a motion does anybody want to talk about anything? Or adjourn? Make a motion. All right. Motion to adjourn.
I make a motion to adjourn.
All in favor?
Aye.
Aye.
Any questions? No? Motion to adjourn? Second?
Second.
Second by Dean.
All in favor?
Aye. Thank you, sir. All right.
Thank